We're talking this week with Ben Laine, who's a dairy analyst with Rabobank. He's recently issued a report documenting the trend that we've been seeing, fewer but larger farms, but he really provided some unique insights. Ben, tell us what you found in this report.
Yeah, so we took a look at some of the ag census data from 2017 that was released recently, just to get a sense of what those patterns looked like. The trend of consolidation isn't necessarily anything new, the movement towards fewer and larger farms being more of a dominant factor in milk production, but we kind of wanted to look at what exactly did that look like, what were some of the drivers of that, and what does that mean in terms of where we see farms and just the overall landscape of the dairy production sector as it is now and what that might look like going ahead.
You had a pretty startling statistic about the percent of the U.S. milk supply coming from farms with 1,000 cows or more. Just to talk for a bit about a couple of those statistics that you identified.
Yeah, so the census data, the interesting thing about it is it's one of the few looks we get at sort of how much of the herd is housed on different sized farms. That's not a data point that we have a lot of access to generally. So it's over half of the herd. It's about 55% of the national herd lives on farms that are over 1,000 head each. So that's a change from 1997, 20 years ago. That was less than 20%. So you also see on those larger herds, they've got higher milk yield, so more milk per cow. So you're somewhere up around 58%, I believe, is what we're estimating for the amount of milk production that comes out of these larger farms. So it's becoming a more influential factor in what the total milk production of the country is where that's coming from and what those farms look like.
You mentioned, and we can all understand, I think, but you had some insights that the economies of scale in a commodity business are really what's driving this, and you identified some factors in the cost structure of larger farms versus, I'll say, more average farms or smaller farms.
Yeah, so there's definitely a factor with economies of scale that is one of the drivers towards these large farms, especially as you have periods like we've seen the last several years where you've got a lower level of prices. People are looking for, if the revenue side of that equation isn't quite cutting it right now, cutting costs and reducing costs is one of the ways that you can continue to make things work, and scale is one of the ways that you can cut those costs. So yeah, the economies of scale, a lot of it is just allocating overhead and things like buildings and machinery and spreading that over a larger number of cows is a pretty efficient way to reduce your costs on a per hundredweight basis. Obviously, it's easier said than done. You can't just decide you're going to be a larger farm just for that. But for those that are in a situation to look to expand, that is one of the big benefits that we see.
You also identified that we're seeing the growth of dairy production in what we would call maybe non-traditional dairy areas too. Tell us what you found there.
Yeah, so I think that's been one of the shifts in the benefits to these larger farms is really driving, it's influencing where you see milk being produced. So the real benefit historically has been to be close to population centers. So you saw kind of the historical, traditional industry being centered around areas like the Northeast, the upper Midwest, where you saw large numbers of smaller farms that were able to be close to the population. That was the big advantage in the past. Now, as we said, the advantage in a lot of cases is being able to achieve scale and being able to produce large volumes at a relatively lower cost. So where we're seeing milk now is areas that are in a variety of ways more friendly to large scale agriculture, or there's, better land values. It becomes harder to have these types of operations that are efficient now, to have them close to population centers. So it's shifted where we're seing that, and we see it in areas like Southwest, Texas and Idaho and California. So a lot of kind of new areas of growth.
And we've also seen the mix in dairy products go from fluid milk, which does benefit from being close to population, to hard products that can be shipped and stored, and where they're produced isn't quite as important.
That's right. Yeah. And there's, as we look ahead, the opportunities to grow our production and grow our market in just in terms of sheer volume, a lot of that opportunity is going to come from the export markets. We've got a strong market here in the U.S. But it's a mature market. It's a high value consumer. But in terms of being able to grow our milk production volume, it's going to come from the export markets, and those are still commodity. That's a commodity situation. So being able to produce high volumes of high quality milk at a low cost is the real advantage.
I thought it was interesting that you, and thought-provoking, that you identified some potential risks with this transition to larger farms, and perhaps some opportunities as well. But tell us a little bit about what you identify as potential risks.
Yeah, well, I think one of the risks that we've seen, and we saw recently as we were finishing this up, was just it's been around for a while, but the risk of animal activism and some of the consumer perceptions of large-scale agriculture. Often these kind of, it doesn't always jive with what consumers' view of the industry is, and so I think that's a concern. Is if people, we already see a trend towards wanting to understand a little better where your food comes from, and local foods and regional foods, and that's fine. But I think that there's the other side of that is that sometimes larger operations end up with a target on their back, and they can find themselves in situations where these groups want to use them as an example and try and change consumers' perception. So there is going to be that risk with large operations. That's the other side of the coin.
But those same trends perhaps provide some opportunities for certain producers, perhaps those of the more traditional size. You did identify some opportunities. How do you see them?
Sure. And so farms that still do fall in some of those smaller categories, I think there still are positive opportunities there. It's a challenge. While they're not going to be able to compete as well on a commodity basis with some of the larger operations, they do have the advantage of still often being closer to the consumer, which can be a positive there. That can be a premium. They're a little bit closer to the consumer geographically, and also just being able to be part of those communities and do things like farm tours. But there's opportunities still in niche markets that aren't going to be for everyone. It's you've got to kind of find the situation that works for you. But there are premium products, and whether it's carving out something like GMO free or A2 or organic and grass fed, there's still opportunities to sort of differentiate product and find ways to increase revenues and get some premiums out of the consumer market.
Do you have any other thoughts, Ben, as we kind of finish up this conversation? Any parting shot, if you will, or any overview?
Yeah, I think that the main thing is just looking at the industry is changing, the landscape is changing, and the industry is always sort of dealing with the two sides of, both what we talked about with the consumer side, the premiumized side of dairy products, and there's also still the large commodity side. And so there's going to be a value of a diverse milk production sector, and there always will be, I think, but we got to be aware of how things are changing and what that means for the future as well.
Thank you, Ben. We've been talking today with Ben Laine, a dairy analyst with Rabobank. And this is Joel Hastings for DairyBusiness.com.